Now you should see the screen. We have, yep, everything is set and ready to go. Once again, happy new week, and happy Monday to everyone. For all those who watched that for the very first time, welcome to our family, Traders Academy Club family. And basically, in the live trading room, we prepare our trading setups, explaining what validates, invalidates them, and what we are looking to happen, what is tradable and what not. Later, you would receive the trading report. This report, please make, if this is the first time you watch that, please make sure to watch the video, understand how all works. Here you have the most interesting and important webinars you, on your free time, better watch to understand what we are doing, how and why. And here on the watch list, you will find the full table of the instruments that we trade. Slightly below, you would find the comments and the explanations coming in. So this is a trading report summarizing the live trading room, not a replacement, okay? An additional part, summarizing and explaining in a few words the whole discussion we have on our meetings. Very important note, you would notice here on the report in the comments, bullish, bearish, and a few extra explanation. Keep in mind, if we are bullish or bearish, it does not mean that we buy or sell with any given price. Very important to understand. It gives the direction. The instructions are explained in the live trading room. If you miss the train, do not try to catch it at any single simple given price. It doesn't make sense. The directions are there, and we prepare them in the live room, so they simplify the follow-up for you. And from here, it's you with your methods, strategies, system, robots, whatever you trade with. Okay, you define the directions you would like to trade first of all, and then you would follow in that directions. And we do that for one main reason. I believe that once you have your plan in advance, what you are looking to trade and what you expect to happen on the chart, if it happens, you know what to do with that. And if it does not happen, you know not to force. Force a setup is the probably number one, or at least number two mistake of traders. Especially when it's boring, you find yourself convincing yourself that there is a setup. And that's what we're trying to prevent and avoid. On the coming live rooms this week, I hope we will be ready to start with that. And if not, then next week I'm moving basically slightly a bit to something like that. Let me know what you think, guys. Okay, I will present it for you now, but please let me know what you think. So I would be basically showing this multi-time frame for a very simple reason of creating a flow. So you always keep it in mind, right? So just for example, if we are here expecting a down move, and here we have a bearish hidden divergence, right? On the 4-hour chart, we have a Fallsburg and divergence. We are looking for sells setups. The idea would be simplify the whole picture and always remember what do you expect to see. And if you see that, you can trade it. Let me know what you think. It's I have this idea just to simplify that for you. So when you watch the live room or when you work after that with your own charts, it's much easier and clearer to follow. Of course, everything later summarized in the report. Okay, so what do you think, guys? I have 2 likes. I would like to hear more if you don't mind. So basically, again, the flow here would be in one screen, not screen after screen after screen. The flow in the video would be like that. Okay, we have many likes and one dislike. Okay. Why? Because it compresses the chart. No, it's actually no, because we go like that. We explain everything and just minimize. Explain, minimize. Explain, minimize. Okay, so later on, this one it would just be a summary. Okay, I got the. I know what I have to improve. Got it. Thank you very much for your feedback, guys. So let's begin. Okay, like that. All right, good. Thank you for that. So let's start, guys. As for now, we go back to the previous because I need to prepare all of them in one thing. By the way, just to give a brief idea what and how it's created, Ahmed, this is for you. You were asking about that. I will create a video later, but just want you guys to have an idea how you create it. You basically open yourself a new profile, put four different charts here. Okay, then you go here to window, how you want to tile that, cascade, horizontally, vertically. Okay, so I'm working with tile windows. It arranges 4 in the row, and then you go to file, profile, and save it as you would like. So I'm preparing it like this. Okay, all my pairs would be every pair would be separate profile. So 4 charts of dollar yen profile. 4 charts of the euro dollar profile. And then it's easy. You click everything from here, opens the charts. Okay, so that's for all those of you who want to create it. Right, so let's start, guys. We have several interesting opportunities to discuss. I would like to start with the dollar Canadian. This is the most discussed one since this morning. So what do we have here? We are trading a triple cycle of the weekly, meaning we are heading towards 50% or until we get an opposite divergence. As for now, there is nothing against us. The last divergence on the weekly time frame is bearish, meaning for the longer run, we are bearish here. Okay. Now the daily should follow up accordingly. That could be 2 waves, right? Or that could be a range. Why? Because that's the corrective patterns that the market has after the cycle is completed. So according to weekly, we expect to see a corrective cycle. Corrective cycle could be 2 waves or a range. And generally, as long as this top holds, this is our invalidation, we are after sells. Ideally, approaching towards the 50% of the weekly chart. That makes it something like that. Daily chart so far looks good, nothing really against. Yes, this retrace on the morning was out of nowhere. Like, why does it happen, right? I'm sure it raised some of the eyebrows up, but the whole thing here still remains bearish. Our plan was and remains looking to sell the rallies. Previous week, we were following the 2 waves to be completed. And how do we confirm it? If each of the legs is a cycle by itself, this one was a cycle by itself, we don't, in that case, we don't even need to go to 1 hour chart because everything happens for us on the 4 hour chart. And that was a double cycle with a divergence by itself, and a Fallback follows, right? So we always go with the last trend line, and why the trend line is available here and tradable here, because all the higher time frames are synchronized to the downside. Weekly cycle is bearish, daily provided the pullback, and we expect the continuation because we are trading 2 waves based on the daily or range based on the daily. So we got the 2 waves retrace. Each of the legs was confirmed as a cycle by itself. We got the breakout. And basically, we are bearish. Our invalidation to the short term is here. Why do we have to keep in mind the invalidation? Because if suddenly we get this breakout, that opens a possibility for one of the 2 scenarios. and then we go back to the higher time frame. It opens for us the possibility that it will be just bigger two wave before the continuation down. It does not change the weekly cycle. It just changes the structure. It develops. Okay, and the time that we will be trading it again. Very important to remember that it does not change the big time frame. Right? We always have this fear that if something, let's say, if there is a retrace on the 1 hour chart, oh, so now it's bullish. No, it's not. Always remember the big picture. Right? If you are driving from one city to another city and you are expected to reach that in 40 minutes, but suddenly you got stuck in some traffic that was not so planned, it could take you 50 minutes or 60 minutes or 70 minutes. It does not change your destination and your expectations, right? It just change the way it develops a bit. And it's very important to remember that because the invalidation for the big picture is here. The short term is here. And the reason, if it breaks it suddenly, that might give one of the two scenarios, two-wave correction to be deeper before the next sell-off takes place, or we can go for a possible range, right? Something like that. Definitely possibility. Why it is a possibility? Because after the weekly triple cycle, we are expected to see correction. Correction could be two waves or a range. That's all. That's the whole picture. So basically, for us, the bottom line, as long as we are below that, sell the rallies could be a good plan. Okay? That's for the dollar versus the Canadian. Next one, dollar yen. Now this is a flow pair. Here's what we have. We do not have any clear cycles to be traded based on the weekly. We don't have double, triple, or anything that could define a range. The only thing we do have here is last divergence to be bearish, currently nothing against. And on this view, we do have the highs going down and the lows going down. And I say on this view because if you take a look on a bigger picture, it gives you nothing, right? So not too clear picture based on cycles to try and define the weekly direction. So we'll do that based on the divergence. Last divergence from the weekly was bearish. Last divergence on the daily is bearish. We also crossing the band to band movement here, not too classical because we have this zigzag back here and here, but it is currently a straight, not a straight, sorry, a corrective mode from one Bollinger to the opposite Bollinger. And the biggest question is what's coming from here. So weekly bearish, daily divergence is bearish, 4-hour chart made a false break and looks bearish, but there is one obstacle at this stage. We yet do not have a structure to the downside. You see that? And what is the structure? By creating lower lows and lower highs. We don't have it yet. Now that raises a question. So if we take a look on this picture, right? The daily might provide us any kind of corrective cycle. It could be one leg with bearish hidden divergence, which we currently have, and move straight down. Or it could be a double cycle, very acceptable. And again, it does not change anything of the bigger picture. Just changes the timing and the way it will be structured and developed, right? So when you remember this picture, you should remember and value your possibilities. If we take a look on the 4-hour chart, that looks like a triple descending cycle. Now, if that's the case, dollar yen has two variations. Do this or maintain a range for a while, and it would be the same two waves we were talking about on the daily, so the correction could be developed bigger. If it does, it doesn't change our big plan because we would be looking to sell that. So for us, the bottom line is sell. We are after sells. We have all the time frame synchronized, and we should be starting looking for a sell. But we have to keep that in mind that as for now, we don't really have any lower lows and sell the rallies. It might happen after the live room. It might happen in the evening. It might happen tomorrow. It might not happen. Just because there is currently second scenario it is developed based on. And this scenario is what we were showing before, triple cycle, which could make it just a bit more extended. That's all. So yes, the dollar yen, we are looking for the sells. The trend line was broken. So far, so good. This is the last available trend line we have with divergence in between and the official lows we can connect, right? But on the same time, the low is not broken yet. So we have to have a bit more patience. So dollar yen, bearish to us. We do, however, keeping in mind a possibility of that before the next big move to start and happen. Okay, it does not change any of our plan. It just clarify that. If one attack fails, it does not make the analysis wrong or cycles wrong or your expectation wrong. And it's very important to remember that, because it's also another common mistake from traders is trying once, giving up because it didn't work out. So the next attack would be ignored, while the next attack could be paying big. So this is for the dollar yen. Euro pound is my next one on the list. So let's remind what do we trade here. Triple, we expect a double. Okay, so for us it was and remains sell the rallies. After the false break we got here, we also now develop lower lows, therefore sell the rallies. Daily chart, nothing against at this stage. The only thing we do have, and we do need to pay attention to for the short term, is this. We have double Bollinger Band duplication, even slightly more, and mainly we have stop loss clearance. What is a stop loss clearance? Imagine how many traders were trying to buy here. Just imagine. Why? Because, well, it was dropping so fast, it has to correct. Logical, right? But I always say, and it's a good and important time to remind it, an official turnaround on the majority of cases, if we exclude the randomality, sometimes there is random moves in the market. So if we exclude that, the majority of times the reversals are structured, which means false breaks and retrace, higher highs, or simply on the lower time frame, higher highs, higher lows, trending change. The trend is bearish if all the highs are going down and all the lows are going low. And the trend is bullish if the highs are going up and the lows are going up. So that's very important to remember this logical thing in the simple definition of technical analysis. So those who tried to attack early got stopped here because, well, always, where do you put your stop loss? Below the last low. For those who said we will be smarter, they located the stop loss here. Both were cleaned. Okay? And this is the only thing that could suggest here some fight of a pullback before a bigger retrace. On the 4-hour chart, we do have a cycle suggesting a possibility of a retrace, and all the way down here. Now, how could that look like? We do not have false break. We do not have higher highs yet. Therefore, the only way it could be, the only two ways the euro pound could be developed is this: retrace down, false break, and some fight, and then correction. Or alternatively, making the structure of 1, 2, 3. 3 highs, 3 lows going up, and then you will be able to trade buy retraces on the short term before the next portion of a sell. Now let me ask you this question. When you understand this picture, is there anything to do with this pair right now? When you understand the logical of the moves, the simple definition of moves, is there anything to do right now? Technically, the answer is of course no. The only thing you have right now to do is to bet. Will that make a retrace or not? Exactly like traders were betting here on this possible double bottom. And here, because it has a divergence, so if it has divergence, it must retrace, right? Or here, when it was starting to make some reversal signs with these spikes. So it's called betting. It's not called trading, it's called betting. Maybe one time you will be right. Most likely, you won't. Not in that case, in general. And it's very, very important you understand that, guys, because it's so easy to say, oh, it has to retrace. It has a support, it has everything. Yes, it does. But so it did here, and so it did here. That was a supportive area, right? So I want you to remember that because the temptation is so big, and it's even bigger when you see something like the euro pound, which is moving straight way down without a stoppage, right? It's the temptation is very, very, very high always to try and to bet when will be the top or bottom is something that most, well, all the traders at some stage of their trading life love to do. And I admit I was the same. I was exactly the same. Today I understand this is wrong, and that's what causes unnecessary mistakes. So once again, do we have a reason for a possible short-term retrace? The answer is 100% yes. Both stop losses areas are cleaned. Bollinger Band duplication twice, even slightly more. No, we don't have any specific divergences against us on the daily chart, and that's why the daily chart is suggesting they sell the rallies. While the 4-hour chart would maybe provide us an opportunity, possibly, to trade these little shorter rallies, short-term rallies, before we go and sell them. Okay, so very important to understand that. So yes, euro pound might turn to be tradable to the upside for the short term. You have to validate, just as explained right now. You do want to see the structure happening, and for longer run, sell. Every corrective cycle to happen, which could be 2 waves or a range or just a big impressive bearish hidden divergence, would provide us a sell opportunity for further run. Okay, so our direction here for longer run, sell the rallies, and buy the short-term rallies would become acceptable once the structure is confirmed. And I once again want to remind you guys, there are 2 waves or of turnaround principles. One, false break and then higher highs. The principle of convergence, which after you can look to buy retraces with a setup. And the second one, if you have no way for convergence, like we don't have here, is the simple definition of trend. Higher highs, higher lows. If that starts to be developed, that offers you some possible short-term rallies. Make sense? So this is the euro versus the pound. Dollar CAD we spoke about. Euro franc for me remains untradeable. I would say even bullish here, to be honest. But the way it develops here with this range makes me stay neutral. So I skip this one, guys. Not clear to me, sorry. Dollar franc. Now this one is pretty nice. We've been talking about it previous week. Short-term sells. So far, so good. Now, why short-term? I just want to remind you quickly. Based on the massive cycles we have here, we are after that, very likely. We still have a long to go here. Now we try to combine the weekly cycle. Do we have any weekly cycle? The answer is no, not really, because if that's the double wave, no problem, then it has to reach 38.2, which it did. Game over. So this cycle is untradeable. So we go and look one to the left, one previous cycle. This was the last one. Also reached its target 38.2. Also game over, right? So we're looking at one to the left, and we find ourselves with possible false break and possible false break. That makes it a range. Range has to come at the end of something, right? And this range comes at the possible development of this structure, this corrective structure, right? So one move, range, including this crazy thing happened in 2015, and possible continuation. So the picture, the way it looks, is very more likely bullish for the long term than bearish, but we do not currently have anything to rely on. So we skip. And on the short term, watching the daily chart, again, no cycles in play. That was the previous cycle, triple, reached the 50%, game over. Then we had this, this also reached 50%, game over. Now, no cycle to rely on, right? So we have divergences. It makes it more aggressive, but it still makes it correct. Two waves. Correction is expected after that on the 4-hour chart. And the 4-hour chart is basically providing us the two-wave correction we wanted to see. If that's the case, each of the legs from the 4-hour chart would have to be a cycle by itself on the 1-hour chart. First one, ugly, but a cycle. And the second one, again ugly, and again a cycle. It has all the principle of divergences, right? So basically, the short-term sells that we were accepting and trading from the previous week now starts to become slowly irrelevant. They paid. Our goal was here, if you remember, after the false break and the lower lows, sell the rallies, right? So we got the rally, we got a bearish hidden divergence, then holding a double top, right? That was the bearish hidden divergence right here. Then a double top, and we got the move down, which happened with the break of the trend line. But now, more and more views from the chart show that this is about to end. 1-hour chart showing the possible divergence on the second leg here. 4-hour chart making the same and possible bullish hidden divergence. So the way it looks, this is a good time to say thank you, Mr. Market. Put a V on the previous week trade for all those of you who were involved here from this place. It's a very good time. Take the money and look for next opportunity. Dollar franc was bearish, becomes neutral. And it's very important to have this follow up for yourself, guys, because once you have the signs against from few time frames, it's time to make the money. As simple as that. Okay, questions about anything of that so far? Wonderful. So the next one, cat franc. Let's quickly remind what do we have here, what do we face here. Double cycle from the weekly, triple cycle from the monthly, long-term buy. To make a long-term buy, the short-term have to fit in. As for now, the short-term starts to show some opposite signs. These opposite signs is a bearish hidden divergence. If that's a bearish hidden divergence, 4-hour chart should be a cycle by itself. Now the first leg was a cycle by itself without a doubt. Then we had two waves correction. which very likely will do this development. But there is a chance that the 4-hour chart cycle is something like that, right? And ending here with this divergence. You can see here, guys, two available scenarios. Which of them is correct? We never can know. The only way for us is to check what the higher time frame does. And the higher time frame, very likely, by the end of the day, will tick down the MACD. That means there is a good chance we are going for a corrective cycle from here. So that would be all one leg, two waves, or a range, as this is the corrective cycle. And only after that, we would be able to trade the retraces. Okay, now we do need the day to end and see how does it end. And we do need, on the lower time frame, to verify false breaks and lower lows. At this stage, as for now, we don't have it. There is no false break at this moment. So what is our other possibility? Remember, we spoke about it today. 1, 2, 3. If that happens this way, we can then sell the rallies. So we will require to see one more low making, and then it will make a triple cycle movement, which makes a possible short-term bearish trend. But again, we do require to see, first of all, another low. Why? Because if it doesn't do it, then it all stays as a double cycle, double wave, or ABCD, or 1, 2, 3, 4, you name it. And if that's the case, it's a corrective cycle before the continuation, right? So as you can see, at this moment, this is a solid, and it doesn't even seem to tasty, right? So for the short term, I would be very careful with cut franc. If we do have one more low, it becomes tradable to the bearish direction. But the bigger picture here is still bullish. So if we get the retraces, that's what we will want to trade. Buy retraces for the long term. Buy retraces for the long term. That's our plan. And short term at this stage isn't valid. Well, it might become valid. At that moment, as we speak, we're still missing the turnaround. We do not have false break. We don't have convergence. We don't have 3 pushes down. We don't have a turning principle, right? Same happened, by the way, on Euro franc previous week. Remember, it was like, wow, so now we have a bearish trend. No. And you can see what happens here. So once it completed the two-wave structure, that was it. No more lower lows, nothing. So the only difference was this one created convergence, and that's why this happened. Cat franc so far doesn't have convergence, and it's very important to remember that before we fall in love with our ideas. It's too easy to fall in love in the ideas, right? To find a way to convince ourselves. So remember, this would become tradable, and I personally think it might be very nice, even opportunity to trade this one as short term, but we have to be careful here. It could easily turn to be a very small range before the continuation. Always remember, bigger picture is bullish. So when you want to trade against the bigger picture, verify the turnaround. Turnaround happens only once the trend is confirmed. So cat franc, our plan, buy retraces for the long term. Because we are in the weekly bullish, the correction has to happen on the combination of daily and the 4-hour. Pound versus the franc, another very impressive bullish run, which I don't think is over. I think there is more to go. We are here in a triple double structure. Trend line is broken. Last divergence is bullish on the weekly. Daily divergence does not have anything against. The only thing we currently have is a triple cycle on the 4-hour chart, which is this. So we might get exposed to some kind of retrace, yes, and we do want to trade them forward to the upside. Two-wave retrace, range, or bullish hidden divergence would provide us the buy opportunity. Okay, so buy retraces for pound franc is our plan. Can we trade? Here comes always the same question, right? Can we trade against? Only if you can verify the turnaround. Do you have false breaks and convergence? No. Do you have the 3 lower highs, lower lows? No. So can you trade against already with sell the rallies? Well, you can, but keep in mind this is a bet. And those who bet here and here and here and here, well, here maybe some short-term profits were made, yeah? But the rest of the cases would be failing. So keep in mind, just remember that. Okay? So for us, pound franc, buy retraces. Next one, Euro CAD. We are for after sell the rallies, triple cycle. We expect 2 waves on the monthly chart. Weekly so far fits in, triple cycle down, range in correction. So for us, it's sell the rallies. To trade long term, the short term must fit in, right? And the short term currently is against because it has a bullish hidden divergence for us. It also suggests bend to bend movement, therefore we are good with corrective cycle. Short term. Now let's take a look what we have here. We have a false break on the bottom, we have a false break on the top. That makes it a valid range, right? To be able to trade a range, we must find a valid cycle inside it. This was the last cycle that we had on the 4-hour chart. The problem with this cycle was there was no too much of confirmation on the lower time frame of each of its legs, which makes it tricky. So the EuroCAD could make 2 bigger waves and sell, or simply hold the range and continue lower. So for us, for the EuroCAD, we are looking to sell the rallies. Okay, and again, can the short term provide us here some kind of deeper correction? The answer is 100% yes. Why? Because if it's a range, we need 5 spots inside it, right? So we have 1, 2, 3. Assuming that might be 4, we might still be playing within this range. 5 spots, at least 5 spots. Okay, so EuroCAD for the long term, we are after sell the rallies. Aussie dollar, weekly last divergence bullish, daily last divergence bearish. If the daily is against the weekly, then we must be exposed to a corrective cycle, and we were here. Bullish divergence came in place. Trend line, well, since I can't draw it so clear, trend line is being broken today, trying to break out. Well, actually, let's make sure. Yeah, trying to break it, still holding, failing to continue with new highs, but we do have the structure of the higher highs. So the short-term invalidation is now fits in the long term. This becomes as invalidation level. And why it's important to have this invalidation level? Because if this doesn't hold, we might go for some deeper correction down before the continuation upwards. So we must be very clear with our plan here. This is our invalidation. As long as it holds, we are after buy setups. Okay? Same with Aussie versus the Kiwi. We are long-term buys here from monthly and weekly cycles. Daily currently was against, right? So we are waiting for corrective cycle. If daily is against, corrective cycle could come from the 4-hour chart, could be 2 waves or a range. As for now, we have only 1 wave. We don't have 2 waves. So this is still doable. And of course, some kind of ugly range here, also doable as well. As for now, no setups on the Aussie versus the Kiwi. So the bullish plan for the long term remains bullish, but there is nothing to put together and nothing to trade as for now. So Aussie Kiwi is moving to neutral. Euro versus the Aussie, our plan, sell due to the weekly triple cycle, false break in play. So far so good. Corrective cycle should happen. Daily was bend to bend that we were exposed here. Then we got a bullish hidden divergence. 4-hour chart must be corrective. 4-hour chart was corrective. Thank you, Ivan. You too. 4-hour chart was corrective, and we get ourselves a trend line breakout. Euro Aussie is bearish for us. Short-term invalidation is here. Why it's important to have this invalidation? Because if we do break it, it does not change the bigger plan. It just changes the structure we would be exposed to. Double cycle might go and be slightly deeper. Again, it doesn't change nothing of the plan. Just will change the way it's structured to continue on the direction. So Euro Aussie looking to sell the rallies. Short-term invalidation is here. If it breaks, we are waiting for the next setup to form and this leg to continue and confirm before we are reattacking. Euro Aussie, sell the rallies. Pound versus the Kiwi. Very interesting opportunity here. We are long-term bullish due to the triple cycle, so we are expecting this. On the short view, triple was in play, right? And we got one correction with bullish hidden divergence. So technically, we still might get this, or at least some kind of fight here before the continue higher. Daily, only on Friday. We were bullish the whole previous week, as you remember. Only on Friday, daily makes us the double cycle with a divergence. We go to 4-hour chart. Each of the daily legs must be cycled by itself, which it is. This spike doesn't really ruin any of the cycles, as you can see. It just makes it uglier and more aggressive. That's basically all, because we continue in the direction up, right? So this spike was trying to prevent it. We continue in the direction up, completing the cycle. So each of the daily legs is a cycle by itself. Now we start to see false breaks. We don't have yet anywhere lower lows. However, we do get here a possible structure of 3 lower highs, lower lows. And if we have that, that means Euro versus the Kiwi is tradable on the sell direction for the short term. We have to break this low, right? Or, of course, if we break this low, then it will make us convergence. But you can see we're not there yet. So by breaking this low, Euro, Pound Kiwi will validate sell the rallies short term. And for the long term, we're still after that. Okay. Here is a pair I was asked a lot about, Kiwi franc. Long term is very bullish here, same like all the francs. This is what we expect. Weekly, last divergence was bullish. No cycle we can rely on as per targets and conclusion. Last divergence is bearish, so daily has to be corrective. Daily was corrective, 2 waves to the downside. and basically that makes it long-term bullish. So that's a short-term daily is against and suggests a corrective cycle. The only way to trade, if we manage to make the 4-hour chart to be cycled by itself, which we do, we have triple cycle, false break coming in place, right? So the biggest question is, do we have the structure to start looking for the sell? We don't have any lower lows here, but because we are trading the short-term daily and 4-hour chart combo, the setup could come from the 1 hour. And on the 1-hour chart, you got a false break and you got the convergence principle, which makes lower lows. So Kiwi franc, as long as this low holds, might be turning into short-term sell the rallies. Very important to have the idea of invalidation for this low, this high, sorry. Okay, so Kiwi franc is a new additional to our watch list this week, and it looks interesting. Nothing more to say. And that's pretty much okay. Euro dollar. There's a question here. Now euro dollar, for me it's not clear, guys. Weekly last divergence became bearish hidden, ticked. Daily last divergence is bullish hidden. 4-hour chart bearish hidden. Complete salad. For me, it means an ignore, at least for today. Nothing clear to me. So we are moving to commodities. Gold provided us the double wave correction, and in that case it was double wave and a range. So we became bullish again with this bullish divergence. We got everything we wanted. So gold remains bullish. We expect this area to be reached and crossed. That's approximately 1310. From there, I would not be surprised if we will start to see some fight, slow down, and some deeper correction. Very, very, very possible scenario. Meanwhile, it remains bullish for us. Silver, which we got an investment idea, missed our buy level, unfortunately, by a few points. So I will send, of course, the update later, but you can remove it. Unfortunately, we wanted it to attack lower and missed happened. So we will be looking for new opportunities here. Meanwhile, silver remains bullish as well. Nothing against, not on daily, not on 4-hour, bullish. We expect the continuation here or here. So looking for buy setups. For all those, of course, who are in, there's nothing new to watch. Just continue with your trade. And the oil, which we wanted as a bearish correction from previous week after this triple cycle, we expect 2 waves or a range. We got one false break, so we might get it holding here. That would be our finish. As for now, we still remain bearish. We expect it to continue lower. And the last few we have on our list, Nasdaq and DAX. So Nasdaq had the false break for us, had the lower lows for us, had the trendline breakout for us, has the hold for us here. That's our invalidation. For us, the plan, bearish, with this as invalidation. German DAX, we are short-term bullish, which means if we get bullish setup, we are trading that for one reason. We expect this triple, double, or a range, one more push, and sell. Short-term, only short-term buy drops. For the long-term, based on this monster, we are after that. So long-term sell the rallies, short-term we expect this. All right, and then we attack the sell. And we have only one stocks that we are trading. This is the Deutsche Bank. We are in the invest here based on monthly and weekly cycles. Nothing more than that to explain. And on the short view, keep in mind this becomes as a triple cycle. So we might get here some kind of correction, and we do expect a further push upwards. So that's basically all we have as for today. Pretty much fat and big list. Any questions, guys? Again, pairs I did not cover are basically not clear to me at this stage. Pairs that lost the synchronization were moved to neutral, like the dollar franc and the Aussie Kiwi. Very important to have the flow of your things. Any questions, guys? So if there is any tool or any instrument or anything else you would like us to analyze, please go to Telegram and put it there so we can answer. Okay, guys, I wish you a wonderful week. Thank you very much for being here. Once again, apologize for the time's confusions, and thank you very much for making it. I'll see you again on Wednesday. Take care and good trading.